benefit of securitization. Benefit from the company which wants to raise money by securitizing their assets. Benefit from investors' point of view who would invest in this securitized instrument. Okay, so paragraph 5 important, and I have written the benefit from both parties, the originator and the investor. So who is the originator? So our example will continuously say HDFC Bank. It is the originator. It has to give loan to borrower and it has to transfer the receivable to SPV. So we are talking about benefit from this party who is transferring his receivable to an SPV for raising funds by issue of securities. So the benefit to the originator is off balance sheet funding. The security issued will not appear in the books of the originator. The security issued will appear in the books of the SPV, and therefore you are able to raise the funds, you are able to raise new funds without disturbing the liability side of the balance sheet. The liability side does not have now any change in the equity or the debt. Of course, this line will be applicable if it is a non-recourse financing. So write down in bracket applicable for non-recourse. Non-recourse. Mostly the securitization is non-recourse. Once the assets are transferred to SPV, now it is their headache to recover the money and pay to the investor. Any bad debt risk will be borne by SPV, or maybe SP also does not pay, ultimately the investor. So that is called off balance sheet financing. The liability does not appear in the books of the originator. Second is, what is the business of HDFC? HDFC Bank is a specialized entity. Its specialization lies in giving loan to deserving parties. Its specialization is giving loan to deserving party. That means those who fulfill the requirement of getting a loan, they should be given loan. Okay, so that is their specialization. They have their process through which they can identify which customer should be granted loan, how to negotiate with the customer, how to do documentation, how to take the collateral, how to complete all formalities, etc. But the SPV, which is going to do the bundling and unbundling of asset, securitize the receivable, raise money, that is another level of specialization. What should HDFC do? Focus on its main business or focus on its non-core business of raising money, issuing security? Answer is it should focus on main business. So you transfer the receivable to SPV and concentrate on the main business of banking. So in case of non-recourse arrangement, even the burden of default is shifted. Very good. So they are able to transfer the bad debt risk also. Next is additional source of capital can be tapped through securitization, relieving trade receivable deposit collection process. So securitization is a process through which companies can raise additional capital. So nowadays more and more companies, especially in banking sector, they are raising the funds through securitization process, giving more loan, again creating more, again doing more securitization. So from a small asset base, they are able to generate more and more business. Fourth is, it helps to improve the financial ratios. For example, in case of banks and financial institutions, it helps them to manage their capital to risk weighted asset ratio. Let us revise capital adequacy ratio formula. Capital adequacy ratio is what you remember from your banking company final account is tier 1 plus tier 2 capital upon risk weighted asset. Now what will be the risk weighted asset? It's basically the assets are multiplied by their percentage risk weight. Higher the risk, higher will be the percentage risk weight. Now in securitization what happens? Your receivables, please understand, gets converted into cash. Receivables are assigned 100% weight. Cash is assigned 0% weight. So what will happen in this ratio? If the value of the denominator goes down, if the value of the denominator goes down, if I am substituting receivable by cash, the value of the receivable will go down. ठीक है, value of denominator will go down. So my ratio will improve. My ratio will improve. I can improve any ratio in two ways. Either you increase the value of the numerator or you decrease the value of the denominator. So what securitization does? Securitization reduces the value of the denominator by converting receivable into cash, and this way it helps the banks to improve their capital to risk weighted asset ratio. Banks are required to maintain certain capital to risk weighted asset ratio. If they don't maintain, RBI will penalize them. RBI will put penalty on them. In extreme cases, they will ask the bank to wind up their business and merge with some other bank. Point number 4. Another benefit to the companies going for securitization is low borrowing cost. They can raise funds at a low cost. These instruments are usually credit rated, and credit enhancement means insurance. So therefore they are able to negotiate a lower rate of interest with the investor, and this reduces their borrowing cost. If they go to the market to raise funds independently, they may have to pay high rate of interest, but under securitization they can borrow at a low rate of interest. 6 number paragraph, which I started with this only. Securitization converts illiquid assets into liquid assets. Point number 7, it helps in improvement of income to asset ratio. Sir, how? Please explain. Suppose a company's capital employed is 100 crore and its income is 10 crore. So its return on capital employed is 10%. Under securitization what happens? You don't have to raise more capital, but you are able to recycle the funds. Because of that, the net income goes up. Without adding more capital, now the net income is 18 crore. So your return on capital will become 18% now. Return on capital will become 18% because your capital employed does not change, but you are able to earn more income because of recycling of funds. So more and more recycling of funds means your income will go up without affecting the capital employed, and therefore some key ratios like return on capital employed, return on assets, return on investment, return on equity, those key ratios improve. Point number next is reduce the existing debtors and its related risk. So this you write down in case of non-recourse securitization. In case of non-recourse securitization, the related bad debt risk is shifted to the SPV. Once the assets are transferred, debtors are transferred, the related risk is also transferred to the SPV. And point number 9 is enhancement of credit rating. So companies which go for securitization, in their balance sheet, the risk gets reduced because debtors are transferred to SPV, and this will help in improvement of their credit rating. This will help in improvement of their credit rating. So these are the benefits which you can write in the exam. Next question is benefit of securitization from the point of view of investor. Investor is able to diversify risk. He has the option to invest in now more types of securities, more varieties of securities. Different securities will have different risk, different maturity, different rate of return. So this way he can invest in securitized instrument and he can diversify his risk. Second point, he gets security which is backed up by adequate collateral. Why would investor prefer this kind of instrument? So these have adequate collateral. Suppose it's a housing loan. Even if the borrower does not pay, there is a house which has a value which can be liquidated and the amount can be raised to repay the investor. So investor knows that there is very little risk involved because I am going to receive my money either from the borrower when he pays, and if he doesn't pay, then we can sell his property, and has credit enhancement also. So they are guaranteed. There are people who guarantee such securities or insured. Again he is safe. If something goes wrong, the insurance company or the guarantor is going to make the payment. And the third reason why he likes this security, because these have to be credit rated by reputed credit rating agencies. Independent credit rating agencies will rate this instrument. He knows what kind of risk he is taking. He can take a more informed decision. And point number 4, it opens up new investment avenues. Investors look for investment avenue. They want to park their money